Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Sir John Templeton. Right now, Bitcoin feels like it's stuck somewhere between skepticism and euphoria. And when markets live in that strange middle ground, things start acting very weird. One day, Bitcoin is flying past $70,000. Next week, it drops 10% in a single day, like someone accidentally unplugged the market. Investors are confused. The headlines are confused. Even the crypto experts on Twitter are confused. So what's actually happening? To understand the chaos, we need to rewind the tape, because this story has happened before. Every financial revolution follows a very similar script. The internet did it. Housing did it. Tech stocks did it. And now, crypto is doing it. Back in 1999, during the dot-com bubble, investors believed the internet would change the world. And guess what? They were absolutely right. But they were also way too early. The Nasdaq surged nearly 400% in 5 years. Companies with no profits, no revenue, sometimes not even a real product, were suddenly worth billions of dollars. Then, reality showed up. By 2002, the Nasdaq had crashed almost 78%. But here's the part most people forget. The internet didn't disappear. It quietly rebuilt itself. And 20 years later, we got giants like Amazon, Apple, and Google. Bitcoin might be going through that same messy middle chapter. Not the death of the idea, just the growing pains. Now let's talk about the numbers, because the numbers tell the real story. First, Bitcoin ETFs. In early 2024, the U.S. approved spot Bitcoin ETFs. Funds from giants like BlackRock and Fidelity Investments started buying Bitcoin directly. Within months, those ETFs pulled in over $12 billion. Sounds extremely bullish, but here's the catch. Bitcoin miners create about 900 new BTC per day. At roughly $70,000 per coin, that's about $63 million of daily supply. But some days, ETF demand alone has reached $300 million. That imbalance can push prices up very quickly. If ETF demand slows down, prices can fall just as quickly. Then there's the Bitcoin halving. Every 4 years, Bitcoin supply gets cut in half. Mining rewards drop from 6.25 BTC to 3.125 BTC. Historically, halvings triggered massive rallies. 2012, Bitcoin rose 9,000%. 2016, Bitcoin rose 3,000%. 2020, Bitcoin rose around 700%. But notice something interesting. Each cycle produces smaller gains, which means Bitcoin is slowly becoming a more mature market. And mature markets behave differently from pure hype. So where does that leave us today? Bitcoin has become something unusual. It's no longer just a crypto experiment, but it's not fully accepted as digital gold either. Institutions are buying it. Retail traders are still speculating on it. Governments are still trying to regulate it. Meanwhile, global liquidity is changing. During COVID, central banks printed trillions of dollars. That liquidity helped push Bitcoin from around $4,000 in 2020 to nearly $69,000 in 2021. But today, the situation is different. Interest rates are the highest in over 20 years, and when liquidity tightens, risk assets tend to become extremely volatile, which explains the wild price swings we're seeing right now. Bitcoin isn't necessarily broken, it's just going through its teenage years. Here's the uncomfortable truth. Nobody actually knows where Bitcoin goes next. Not the influencers, not the banks, not even the whales. But history gives us a clue. Every revolutionary asset goes through 3 stages: disbelief, speculation, and normalization. Bitcoin has already survived multiple 70 to 80% crashes, and yet it keeps coming back. So the real question isn't, will Bitcoin go up tomorrow? The real question is, are we watching another temporary financial mania, or the early infrastructure of a completely new financial system. And now I'm curious what you think. Do you believe Bitcoin will eventually become digital gold, or is this entire cycle just another bubble waiting to pop? Let me know your thoughts in the comments below. Your perspective might actually help someone else see the market differently.